Hey guys, it's December 7th. It's Friday. At the end of a long week, first week of December, we have a major weather system that has hit the southern portion of the United States that's going to impact freight. It's the biggest winter weather system of the year so far. And Nick, we're going to talk a little bit about that. What are you seeing?
Well, we're talking about snow and ice for parts of the south, but initially it's all rain. Right now it's just drenching Texas. We're going to see flooding rain from San Antonio, Dallas, down to Houston, along I-10 and I-20 corridors. So that's happening today, and it's going to keep happening tonight. This big system right here moving over Texas in Louisiana. So those areas are just going to get doused. 6 to 8 inches of rainfall. There could be parts of I-20 and I-10 that get shut down because of flooding, as well as secondary routes. But late Saturday night into Sunday, that's when this system on the cold northern end of the system is going to bring ice and snow to parts of the south. The worst hit area is going to be Charlotte, North Carolina, and the mountains right along the North Carolina-Tennessee line. So Charlotte, the city of Charlotte itself, could see up to 4 or 6 inches of snow, which for a big city in the south could just shut it down.
So that's, I grew up in the south. You've been here for a long time. An inch of snow is a big deal in places like Charlotte, North Carolina, and in that southern portion.
It really is. A lot of cities in the south don't have snow plows or a lot of trucks to take care of that stuff.
So this is going to be really, really impactful, particularly for that southern portion, in a really relatively soft market as it is. I mean, if we sort of look at the OTRI index, which the OTRI is really an index that reflects whether carriers are accepting loads or rejecting loads and the percentage of which they do. We're looking here at the weekly comparisons. The market has sort of softened compared to last week, at least in Charlotte. And you're saying that this could have a bigger impact on that southern corridor than what we've seen even this week.
It really could. There's plenty of capacity in the Charlotte market right now to get stuff out of there if shippers can do that on Saturday. If they can do that.
But
otherwise,
no shippers are open on Saturday.
Most of them don't. So it means that they're not going to be able to get anything not only out of there, but even in there. Because it could take a few days just for the ice and snow just to melt away and things get back to normal into next week.
So drivers that are thinking about taking loads into the southeast, particularly that Tennessee and North Carolina border, should probably think differently about accepting loads, right?
Absolutely. Not only especially for driver safety. I mean, that's the number one thing. Nobody can drive on ice. And when you have several inches or even a foot or more of snow, like there will be in the mountains, on top of freezing rain and ice, you can't drive through that stuff. Nobody should.
I mean, safety is obviously first, and that should be top of mind. But also, if you end up taking a load that's going into that region, because this may be a big event, sort of taking us into early next week, it may take a couple of days for shippers, manufacturers, and retailers to sort of come back to work in terms of full force, and even be open to accept your load, much less give you a load outbound, right?
That's correct. Yeah, I mean, you just get stuck there.
So kids will be excited because they're out of school.
That's right.
My son here in Chattanooga, Tennessee, has asked, when is the snow going to hit? And is very excited to wake up and hope that Monday he doesn't have school. But with that said, there has been, Zach, what are you seeing in terms of just the overall market this week? And what do you expect looking into next week that we should see?
So the market this week really kind of went flat to slightly down. We saw tender rejections nationally kind of come down, not a lot. It was a very moderate week. But you can see the map here kind of reflecting the weekly change in tender rejections. The dark blue areas are very minimal. There's a lot more red than there is blue. You have this area up here around Maine and New Hampshire, showing the darkest blue in the country right now. They're having trouble covering their loads up in Maine right now. Probably one of the more volatile places in the country. It's a low volume market though, so there's not going to be piles of freight sitting there. The Charlotte market, as you mentioned, showing red. What that means is probably the carriers are trying to reposition their fleets to get them out of the market and out of the harm's way for the weather. The rest of the country, very stable though. Things are looking good. Into next week, we expect early next week will probably be more of the same pattern, but as we get closer and closer to the Christmas break, driver availability becomes an issue, shipper availability, there won't be as many people open. So you're gonna probably see a little bit more turning up of tender rejections.
And that's really reflective of anywhere in the country, particularly because the South is a major producer and consumer of freight. Just by nature of supply chains, it is.
Yeah.
So it will reverberate through the entire freight economy, as you expect.
Yeah, absolutely. Atlanta is the biggest single market in the country, so yeah, there's big ripple effect throughout the broad market.
Got it. Very interesting. And there's been a lot of other news today that is really happening. John, you are the resident. You're our market expert related to oil. Folks that read our publication are familiar with you on your editorial side. They may not be familiar with your background in the oil markets. Why don't you tell us a little bit about what you've got a lot of experience in this.
I worked for Platts for almost 30 years. Platts is the oil and gas and energy news and pricing service division of what was McGraw-Hill, now is S&P Global. I was the head of oil for about 10 years, the head of news for about 4 or 5. So I've been to a couple of OPEC meetings in my life. I started the dated Brent assessment, which is now the world's benchmark. It's a lot more complex now than it was back then, but yes, I've been around for a while. So the OPEC meeting that ended today in Vienna was very interesting because yesterday there was talk that the cuts that OPEC would make would be about 1 million barrels a day of supply, and the feeling of the market was that probably wasn't going to be adequate enough to balance things. And so the markets were down yesterday. I woke up this morning, the talk had turned to about a 1.2 million barrel a day cut. The meeting was actually today. They met yesterday as well. And lo and behold, OPEC did in fact vote to implement a 1.2 million barrel a day cut starting in January. 800,000 barrels a day of that's going to come out of OPEC. 400,000 barrels a day is going to come out of some non-OPEC nations, mostly Russia, but with some of Russia's friends. And on top of that, really what's been interesting in the last week is that the province of Alberta has ordered that its producers cut about 325,000 barrels a day, which is unprecedented. That's never happened before. So as a result of this, you add all this up, you get about 1.5 million barrels a day cuts starting in January. And when you look at the projections for supply and demand next year, that really is about maybe a little less than what the market was going to need to balance. So I think that the benefit that truckers and transporters have been riding since October, really the start of October, about a 50-cent drop in the price of diesel. I think for now, you're going to see that it may have hit its bottom. And in fact, market prices today after the meeting, the results of the meeting were announced, have definitely turned up.
And a lot of it is being caused by just U.S. domestic oil producers just pumping it out.
Yeah, this is really an incredible chart. I mean, you see this going, I mean, what would be even more incredible is if you could go back to, let's say, 2005. You know, you're talking about 11.7 million barrels a day now. 10 years ago, I just looked at the charts, 10 years ago it was about 5.8 million barrels a day. So it's doubled. And this week, some numbers came out. The Department of Energy, the Energy Information Administration, each week puts out a lot of statistics, but they put out one on net exports, net imports and exports. And the U.S. last week was a net exporter of all petroleum, that's crude and products. So we still imported some, we exported some, we imported some, but when you added it all up, we exported more than we imported. So figure zero. In 2005, it was up to 13 million barrels a day. So 13 million barrels a day of net imports in 2005 have been shaved down to essentially zero. Now, that's going to fluctuate. It's probably go back up, but it's just the trend is phenomenal, and you know that rise in production is the primary cause.
So John, that has been an amazing turnaround for U.S. domestic oil and sort of creating not only jobs here, but also having an impact on just our economy, because those petrodollars are staying in the United States versus going overseas.
I mean, it's had huge international relations on, you know, the U.S. has always sort of had to kowtow to a lot of nations because they needed its oil, and that's all over with. It has had a significant impact on geopolitics.
So John, another thing is, you know, we look at, and we certainly, oil, as we have a lot of domestic oil production in the United States, creates a lot of truckloads because you have piping, you have sand, you have water, you have to move a lot of product into those oil wells, and then you have the oil that's sort of created out. Regardless of it, creates a lot of demand. The other thing that you mentioned is that by having more production and sort of keeping a cap on prices, because as the U.S. has sort of flooded the world oil market, prices of diesel have gone down. I mean, looking right here at the ultra low sulfur rack price, which is the wholesale price that truckers may or may not be familiar with in terms of really the rack prices.
Well, what they should know is that the retailers that they buy from buy at the rack price, or some function of the rack price. There's different ways of playing it, but this is the last price that an oil company sets. If you pull a car or a truck into a station that says Exxon outside, Exxon didn't set that price, but they did set the rack price that that retailer bought at.
And the difference is, of course, in there's transportation costs. There are costs related to taxes that are incorporated in the retail price, and then, of course, just the markup of the retailer. But just looking at this chart, I mean, we're at wholesale rack price on an average basis is $1.91 a gallon,
Right,
which
now,
is...
I can't get the number when it's up there. When the peak was around October. But that looks like around 252. So you see about, okay, where you go? Yeah, 252. Wow, very good. Oh, 255. Very good guess. So you see how much it's fallen. But I do think with the results of the OPEC meeting that came out today, I think you're going to see that price being a bottom for now, the 191.
So you think that's a bottom on wholesale prices? Let's go look at retail DOE, because this is really... Fuel surcharges are set based on the Department of Energy index and assessment. Also carries the sort of the price of fuel that quoted. DOE has not had that rapid drop that we saw up until lately. So there's still a big variance in sort of the retail
prices never move as fast as spot prices, which drives some people crazy. A lot of it is that the individual station owners, you know, if they've got cheaper stuff in the tank, they're not going to want to cut prices that fast. But they eventually have to, because the market will catch up. So that's why you don't see it quite as volatile as the rack prices, or if you saw the commodity exchange prices.
Now, one of the things that the larger trucking companies do is they actually set their price of purchasing diesel on a rack price and do a rack cost or minus, which is the difference. But for small owner-operators or carriers that haven't been as aggressive, they're not going to see as significant of a pass-through and discounts as what the bigger fleets will do.
Right, they'll probably pay the full retail price. They're not going to get some great deal. You know, obviously there's more purchasing power if you can cut a big deal with some suppliers.
So the other piece of that are shippers that have fuel surcharges that are paying based on DOE are also not going to see as great of a decrease in cost as what the...
Not right now. For example, the DOE average that'll come out next week will reflect the activities of this week, and this week it was all down until today.
Got it.
Until Friday. So that's not good. You're not going to see that next week, but you probably see it the week after.
So
eventually it does catch up.
Yeah, so we should see some margin expansion for carriers that have fuel surcharge contracts and are buying at wholesale prices. There'll be margin expansion for them because they're not having to pass all those cost savings on to their customers.
They'll get a nice little lag. There'll be a little arbitrage.
Of course, it hurts them the other way when the market, the price goes up.
Does, yeah.
So, well, John, anything else that you're sort of looking at, oil, and what you think sort of on the horizon? You said it's the bottom?
Well, I will say this. I think that if prices can stabilize here, I think you've got a bit of a sweet spot. I think that there was the fear that if, let's say, OPEC did nothing or the market was really disappointed with it, that you'd fall further, and then you know what's going to happen. You're going to start to get some shut-ins. You're going to start to get some bankruptcies or some financial squeezes, and then you can lose some jobs there. Some of those trucking jobs, pulling frac sand, et cetera, are going to go away. I think if you get, let's say, around $55 WTI, $55.60, that's going to be a sweet spot for most companies, and it's probably a sweet spot too for countries like Saudi Arabia, et cetera. So kind of at that level, everybody's happy. Obviously, as consumers of gasoline, consumers of diesel, we always want it lower. But at a certain point, it can only go so far, and then the market reacts. Supply is constrained, demand soars because it's so cheap, and it doesn't stay at that level. So 55.60 might be that sweet spot, and it's possible that the OPEC agreement, agreement that was reached today, is going to provide that sweet spot.
That's encouraging to hear. You touched on it, but oil demand, particularly domestic production, has a higher cost than what Middle Eastern oil does. And as long as we have a little bit of margin, not too much sort of rapid increase, that's healthy for U.S. producers.
When oil prices started to fall in 2014, the first thing that everybody rushed to find out, particularly when the media was writing about it, is what's the break-even price in the shale? And the numbers would be like, 190. Nobody had the magic number. But the numbers you hear now, that kind of same conversation takes place. But they're not talking 70, 80, 90. They're talking like, is it 30? Is it 40? Is it 50? So, it can operate on a much lower level than it could back when prices first started to collapse in 2014.
Got it. Well, John, I really appreciate you being here today, and really great to get an update on oil. It's always has an impact both on demand and on price and cost, and so it's really great to hear from you and your knowledge of the oil markets. And with that, we're going to wrap up this week. This has been FreightWaves Now. Every day at 4 p.m. Eastern, you can tune in on our social media accounts or directly on the website to tune in to what is going to happen over the next 24 hours to 72 days. Also, if you like the charts that you're seeing, we put out 80,000 time series data points every single day, and it's articulated on the maps and charts that you see on our Sonar platform. Contact us to set up a demo. We'd love to show you what we're up to. And with that, have a great weekend. Be safe out there, and we'll see you next week.